Okay, welcome back to my channel. Today I'm going to be showing you guys how you can get a house for 3 to 5% down. I have with me Don Pesh. He's a mortgage specialist here in Orange County. Don, can you tell us a little bit about yourself?
Sure. I've been doing mortgages for as long as 28 years.
Mm-hmm.
The
lot
market,
of experience.
the market, of course, has changed, and the method has changed for doing mortgages, and the requirements and the qualifications have changed through the years. But we change with them so that we can successfully originate, fund, and record your loan file.
So tell me, if I want to get a house, I'm making, let's just say 50, 60, 70 grand. How can I go about it? What do I need? How much do I need to put down? Let's say I contact you. Why don't you tell us the name of your lending company? But let's say I contact you. What do I need? What's the process that you would advise someone like me to do?
Okay. Well, first of all, my company is Advanced Capital.
Here in Tustin, California.
Here in Tustin, and it's under DRE 01038-332. Also MLS approved 254200. Mm-hmm. But at any rate, how would you purchase a home with a minimum of 3% to 5% down?
And it's possible, right? A lot of people think you have to put 20% down.
No, it is definitely possible. Usually a first-time home buyer, there are different programs. Of course, there's FHA. FHA limits vary in different counties, higher in Orange County and LA versus possibly Riverside or San Bernardino, but still a great vehicle to purchase a home. First of all, we would start with a basic questionnaire. We can do it verbally or in writing, telling us about your employment,
how much money you make,
the income you have, and not only the income you have, but how long have you had this stream of income.
Yeah.
A 2-year history is actually ideal. There's, like I say, there's FHA. FHA is a great vehicle to buy a home, 3.5% down. The FHA guidelines are usually a little bit more lax than, say, if you went to Fannie Mae or Freddie Mac, but still they'll go up to usually a 57 debt ratio, meaning your principal, interest, taxes, and insurance plus your bills can't be more than 57% of your income.
Monthly take home.
Monthly,
yeah.
Well, no, not monthly take home, monthly gross.
Monthly gross, okay.
And you can have more than one co-signer, or if a husband and wife, that's fine, combined income, or husband and wife and nearest relative, could be an uncle, a cousin, your parents, to help you qualify for the home. So anyhow, that's FHA. If we go to Home Ready or Home Possible, Fannie Mae, Freddie Mac products, you can put down as little as 3%. The qualifications are a little tighter, but still fairly loose. 45 to 50% is usually the debt ratio in that situation. Again, credit is important. Good credit is
700, 750.
No.
650.
No, we can originate and fund as low as 620.
So 620 is the lowest.
Now we also we can also help with different situations. I mean, we do refinances. And the reason for taking a refinance would be to take cash out of your home. Usually a lender will go 75 to 80% depending on the property, or you can use, that as a purchase vehicle. The situation with Fannie Mae and Freddie Mac is their guidelines sometimes become a little stringent, and you may need help through the process. Let's say you have alimony, child support, a tax lien, you have co-signed for your kids' automobiles, you have co-signed for student loans. We get involved with that. We help you through that process so that you are able to qualify. And it's a situation where if you call an enormous company, they don't want to take the time to get into solving those problems. We can help you with that. Sometimes the time factor is a little bit longer, but we're dedicated to solving those problems.
Now, what is the benefit of putting 3 or 5% down instead of putting 20? Or what are the disadvantages of that?
Well, 3 to 5% down gets you into the real estate market.
Yeah.
If you're not into the real estate market,
You're renting.
5 to 10, 20 years from now, you will not have an equity position.
Yeah.
So whether you're 18 or whether you're 60, you need to start.
Somewhere,
If you don't start, then you're going to have a problem down the road.
And 5% is much easier to save than 20%.
Right, exactly. And let me roll this back too. The first-time homebuyer programs, especially FHA, will allow a gift from usually a family member or a close friend so that you can buy. In other words, let's say you have a good income, but you have no savings. That money can be gifted to you, that 3% down, that $7,000 to $20,000 can be gifted to you from a family member, a friend, and they sign a gift letter, and that's your down payment.
Now, let me ask you this. Let's say you are self-employed.
Right.
And you don't have 2 years of W-2. You have self-employed. It's
Right.
all finagled. You did a W-2 a year ago, and now you. How do you guys work through that? Because other lenders won't even lend to you unless you have a W-2.
Yeah, that's a great question. Self-employed borrowers usually have to work harder to get a file done. The income has to qualify you. Your gross adjusted income has to be enough to qualify you.
So what are we talking on, like a $400,000 condo in LA Metro? What
Yeah.
kind of income do you need?
Well, let's say you have no bills, okay?
Yeah, no debt payments.
No car payments, no credit cards. You just have, you have a rent payment, obviously, that'll disappear once you close a file. But
Yeah.
your adjusted gross income should be, let's say you have a payment of $2,000 a month, okay? You want to show your adjusted gross income on a monthly basis of $4,000 to $4,500 per month,
Okay.
which would equate to $50,000, maybe a little more per year.
So you can get into a condo for $50,000 pretty much
Yeah, with no bills.
with no bills. Yes.
Now, if you have student loans, we're going to have to work with that.
Yeah.
A lot of the lending companies for student loans, like Great Lakes, will issue the information we need to bypass
Yeah.
the payment on the student loan amount. Not so much FHA in that particular case, but that's where we help a lot of people
Yeah.
and get through that process. Yeah.
And the 50,000, that's for a self-employed person, or is that for a W-2?
Well, W-2, of course. I mean, that would be.
And if you're self-employed, what does that number go up to?
Well, that won't change. That's your adjusted.
Oh, it's still 50,000.
Yeah.
Oh, okay.
That's your gross. In other words, you own a business.
Yeah.
You take in so much money every year.
Yeah.
You have costs. You have expenses. You have cost of materials, telephone, cell phones, internet,
yeah.
whatever. That's subtracted from your gross.
Yeah.
That will give you your adjusted gross income.
And it needs to be at least 50,000.
That's pre-tax income.
4,500 a month, 4 to 45.
Yeah, I would say
4,000
with no bills, but at any rate, we can, once we have a credit report and a qualifying income, we can issue a pre-qualifying letter.
Yeah.
So.
Now, what if you have, for example, what if you have a inheritance or a trust account, or your parents have some money? I'm just trying to think for people.
Sure.
If they might not fit some of the criteria, is there ways to work around that if you have?
Trust, if you've got a trust or you've got an inheritance, those funds will certainly qualify for the minimum down payment. That would be a simple down payment transaction.
Mm-hmm.
Yeah.
Cool. And what else would you recommend for someone if they're starting out? How big of a house? Let's say they qualify for. Do you recommend people get as big as they qualify for, or what would you recommend for someone making 60 to 80 a year in LA? Like, should they just try to get as big of a place as they can get, or should they start out with a condo, or?
Well, I would say the real estate. I've observed the real estate market in California for almost 30 years. And even in difficult times when property values go down, they always seem to recover.
Yeah. Because
we're in one of the we're in one of the hot spots of the world.
California.
Okay? So you don't want to buy more than you can afford, more payment than you can make, of course. In fact, you'll be eliminated through AUS, which is the automatic underwriting system.
Mm-hmm.
But I would say get as much as you can.
Yeah.
Get as much as you can, but don't overdo it.
Now, if I put one of the biggest arguments against 3 to 5% down is PMI. What's the deal with PMI?
Well, and well, Home Ready, Home Possible, the PMI is built in to the rate.
Oh, okay.
Okay.
Yep.
FHA, no, you do have mortgage insurance.
Yeah.
No matter how you look at it, 3 to 5% down, that's a cost of getting into the real estate market.
And what would mortgage insurance be on that hypothetical $400,000 condo?
Well, you
less
would
than $1,000 a month.
I don't know. Oh, absolutely.
Yeah.
You would basically take the loan amount times roughly 0.085%.
And that's what it is for a year or for a month?
That would be a yearly basis divided by 12.
Yeah.
For instance, on
400,000, that's like $4,000.
One of the files I'm doing now, let me just put it into perspective. we're looking at 300,000 with approximately an MI payment of about 160 a month.
Yeah,
Okay.
it's cheap.
Yeah, and well, when you think about it,
You get in, you're not paying rent, you're paying down
you have
your
a
equity.
you have a
you know,
you have a deduction.
You have a house, you have an equity position, and
Right.
PMI, especially if it's not built into your rate, if it's on its own, that goes away once you hit 20%.
You can refinance once you have a 20% equity stake, 75 or 80% loan to value situation, which puts most people in a favorable position.
Yeah.
So you're a fortunate person then at
Yeah.
that point. Yeah.
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 And now, if I put down 5% on a $400,000 condo and I'm paying my $2,200 a month, $2,300 a month, how many years would it take me if I didn't include any more money? How many years would it take me to get to that 20% level? And then what if I wanted to put in more money? Like, is it theoretically possible to get to 20% within 2 to 3 years?
Well, you're talking about paying the loan down.
Yeah.
I would say with no appreciation at
Yeah.
all.
Yeah.
Okay. I would say we'd be looking at, out of the 30 years, you'd probably be in the 10 to 15-year bracket.
Yeah.
Yeah, exactly. Yeah.
Yeah. Very cool.
Right.
Yeah. So, what words of advice would you give to someone who's looking right now to get a loan and they think, oh, the economy might crash in the next 2 years if Biden gets in or if Trump gets reelected? What do you say to people who are just afraid to make that first step? Maybe they have 5% down, maybe they have 20% down.
Well, if I had a crystal ball, I would say, I would be 100% correct. I would say jump in, depending on your comfort position. There's no guarantees. I would say California real estate is probably one of the best investments you can make. Not only do you live there, you have all your personal possessions there, you have your safety there, you have a tax deduction there,
Yeah.
you're building equity there. What else? You don't have that with a stock position.
Yeah.
Yeah.
And my last question to you is if someone's in LA Metro, let's say from Calabasas all the way down to San Diego County, where do you think is the best area to look at right now? I know you've talked about Brea, we've talked about Laguna Niguel. If you're kind of a young professional, where do you think is a good place to look?
Well, definitely the suburbs are always a big hit with young people with families. Older people who maybe are in retirement may like areas heading out through Menifee, San Jacinto, Beaumont, those areas that are a little less expensive, and you get more for your money out in that direction, maybe even Murrieta and Temecula.
Yeah.
But for a young person, starting a family or maybe having a family, or the suburbs are always a huge winner. Yeah.
Now let me ask you, my final question is, what if someone wanted to live abroad, namely Mexico, Tijuana, Ensenada? Are they available? What would the process be to getting a loan? Because property is, a quarter of the cost across the border.
If somebody from the United States wanted to buy property in Mexico?
Could they go through your company, or is it just through?
No, definitely not.
No.
No,
Yeah.
no. You would need to find property in Mexico. Yeah, we don't. I've never sold a.
Yeah.
Or I've never done any business in Mexico ever.
Yeah.
No. No, that's a whole different chapter.
Different ball game.
That would be a
and,
different video.
Yeah, sounds good.
Yeah.
Well, thank you, Don. I appreciate it.
Thank you, Evan. Take
Check
care.
out Don. Don, do you want to plug your Facebook and your company again?
Yeah, Advanced Capital, Tustin, California. We're here to help, and
He'll treat you good. He'll be your friend. He'll get you the best deal you can possibly get.
do you want the email address?
Yeah, give him your email.
acrdcp@yahoo.com.
And then just put in the title like YouTube somewhere so he knows where you got sent from. Well, hey, thank you again, and can't wait for you to come back.
Okay, very good. Thank you, Evan.